Holy smokers, ladies and gentlemen, we have some big things to get into in this video here today, including my favorite stock, not my biggest position, but my favorite stock. Cake just came out with earnings right now. I want to talk about what's going on here. We're going to talk about the stock. We're going to talk about, is this stock on its way to $70+ a share? Are we on the way to $50 a share? All that good stuff. Palantir, another investment of mine. I've taken the far majority of profits in the stock, but it's still an important position for me. Probably multi-six figures if you add it up across my portfolios. They are in a bunch of drama here today, okay, regarding Alex Karp's jet and the use of that, regarding taxes and all that. Oh my gosh, okay, so we'll talk about Palantir and what's going on there, okay, and I'll share my opinion and perspectives on if it matters for the stock. From there, I want to react to this 3-minute clip. Tom Lee went on CNBC here today, shared his opinions and perspectives on where this market's headed from here. Mohammed El-Aladian spoke about what he expects for the market, including a lot of volatility. We'll share, kind of my thoughts in regards to that. And then we're going to get in this one. Mike Wilson used to be a big bear back in the day, but I guess not so much anymore. Mike Wilson says AI cycle is just getting going. So looking forward to reacting to that. Little 3-minute clip there. A lot to get into in this video here today. Appreciate y'all for joining me. One thing only I need from you. If you could just smash that little like button, I'd appreciate that in the biggest way. Additionally, if you want to make sure you're subscribed to the channel, put notifications on, all that good stuff, okay? Alrighty, so Cake. Let's get going here right off the bat with Cake. What's going on here? Well, listen. It wasn't a good quarter, in my opinion, for Cake overall. Okay, I gave them a C- grade in regards to this. The revenue went to 961 mil from 920. That's good. Food and beverage costs dropped as a percent of revenue. Also very good. Labor expense dropped as a percent of revenue. Also very good. And then other operating costs and expenses also dropped as a percent of revenue. Those are all great things. That's what you want to see. However, general administrative expenses was really high. That went to 7% of revenue. That was up like $10 million, roughly $9.5 million year over year, right? Depreciation and amortization, that went up a bit here. But then you had this kind of weird line item here. Impairment of assets or lease termination expenses, acquisition related, contingent considerations, compensation, amortization of expenses. This was up 2.3%. And then this one was up this one was up to 2.3% of revenue from 1.7%. And then this one was a big boom here. This went to 1.2% of revenue from basically, it was actually a help in this quarter last year. Also, pre-opening cost was also up quite a bit year over year, almost $2 million up there. So expenses ended up going very high here to 96.5%, but it's a lot of like weird kind of more one-off type things here. So just do keep that in mind. Like part of this had to do with this like gift card situation, which we'll talk about here in a moment. So income from operations fell to 3.5% from 5.1%. Diluted EPS 60 cents versus 83 cents in the same quarter last year, right? But the thing to keep in mind here, right, is there had a bunch of weird things here, okay? Impairment of assets and lease termination expenses. This is not something that usually reoccurs, okay? Especially in terms of this sort of big number like this. They had this gift card adjustment that hurt them by almost $9.4 million there. They had tax effect of adjustments as well, right? So if you adjust on a non-GAAP basis, their net income would have been $48 million. Now that's still versus $51 million in the same quarter last year, so it's still down, but it's not as bad as it looks, right? So it certainly wasn't the strongest quarter from Cake, and I think a lot of people kind of expected that, just to be honest, in regards to not being the strongest quarter for Cake, and I think that's why you saw a little weakness in Cake stock early in the fourth quarter last year. And a lot of that went back to like the government being shut down and, that potentially hurting sales and other factors as well, right? So that's just something to kind of keep in mind there. Now, the most important part of their presentation here that they did for investors, they talk about North Italia, right? This is a very exciting concept that's growing immensely for the company overall, right? But this one had a bad quarter for them overall, I would say. Basically, the latest quarter comps sales on a quarter-over-quarter basis, or quarter, basically this versus this quarter last year, was down 4%. So wasn't a good, impressive quarter from North Italia. Keep in mind, still likely a very profitable concept and doing very well overall, but the comp sales were not good in the quarter. As far as Flower Child goes, they don't break out those specific numbers, but this remains a huge growth vector for the business over time. About 50% of the business is basically off-premise, or like, people take it to go, delivery, those sorts of things. And from my understanding, they're still only exclusive with DoorDash. So if they ever open that up, there's more opportunity there, right? Potential for 700 domestic locations over time. As of right now, they only have 43 locations. So a lot of expansion opportunity there. As far as Fox Restaurant Concepts, they have a lot of growth concepts coming here, essentially. 55 locations right now. And as far as what they did for revenue for this side of the business, $355 million last year. And they're across 11 states, right? This really shows you, obviously, Cheesecake Factory, that's their big ATM machine. North Italia and Flower Child, the ones that are expanding across the United States. And then Culinary Dropout, Blanco, the Henry, those are ones that are more testing in different markets right now. Now, this is disappointing in my personal opinion. They're talking about only 26 new units in 2026. I'm not happy with this. They opened 25 units in 2025. I just don't think they're opening nearly enough concepts, especially in regards to Flower Child. They need to be opening up 26 Flower Childs a year. Like, with how few Flower Childs they're opening, like for instance, last year, they only opened 6 Flower Child locations. Okay, you believe Flower Child is going to be 700 locations, right? We're at 43. Do the math on that. How many? We're going to be opening Flower Childs till, I don't know, AI takes over. Come on, man. We got to get going here. With Flower Child, we cannot open 6 concepts a year. That's ridiculous. Flower Child needs to be opening 20 to 30 concepts a year in and year out, like clockwork. 6 concepts is not going to cut it, man. No. It's just ridiculous. They're just going way too slow in regards to this. When you got a hit concept, you need to be like Chipotle wasn't like, we're going to only open 6 Chipotles a year. No. When it was obvious they got a hit concept there, and they were expanding it rapidly, right? We got a hit concept here with Flower Child. We got to go faster than 6, new units a year. Like, it's just ridiculous, man. So this is one area that I'm definitely, I would say, not happy with Cake about. Like, we've got to move faster. We got to hit, man. We got to hit. Like, let's go. Let's get this out there, man. So that's my 2 cents on that, right? Now, as far as fiscal year goes, FRC was basically flat with sales. Cake was very, very slightly, and North Italia was negative 2%. So I would say it was kind of a disappointing year for North Italia. You always want to see any of your restaurant concepts growing, and especially North Italia. It was a disappointing, I would say, year for North Italia, right? As far as fiscal year 2025 highlights, revenue was up 5% year over year. Net income was down 5%, but keep in mind there was a bunch of weird things up there in that, right? Adjusted EBITDA came in at $354 million. That was up 8% from the previous year, which is a very nice number, adjusted EBITDA there, right? Remember, a company like Cake takes big depreciation and amortization all the time, right? Diluted EPS down 4% versus last year, but adjusted diluted EPS was actually up 10% versus the previous year. So, like I said, they had a lot of weird things that just, kind of hurt profitability on a GAAP basis, but you back those things out on a non-GAAP basis, and it actually looks a lot better than, on a GAAP basis there. Capital allocation, $146 million in CapEx. $52 million in dividends. They did just up their dividend as well. They're given another 3 cents a share per quarter, essentially, which I'll gladly take that, right? $154 million in repurchases. As far as 2026, talking about consolidated sales of approximately $3.9 billion. I think they should be closer to $4 billion, in my personal opinion. Net income margin, they're targeting 5% of basically that revenue there. So keep that in mind. New unit growth. Look at this, man. This is the most disappointing thing for me. 6 Cheesecake Factories, only 6 to 7 North Italias, and only 6 to 7 Flower Childs. I'm like, what are we doing here? What are we doing, man? We got to hit concept. We got to move faster on Flower Child, in my opinion. Got to move faster. So, yeah. Got to move faster, man. Like somebody's got to get a hold of the management team and be like, dudes, we gotta get moving on Flower Child. This is just unacceptable. 6 to 7 units, we gotta hit. What are we doing? We gotta go faster than this, man. Gotta go faster than this. So I hope somebody can get a hold of management and be like, what do we need to put in place so we can start growing Flower Child at 20 to 30 concepts a year in and year out, right? And even that still isn't like a crazy number. It's not like it's like, oh my gosh, like 20 to 30 concepts. That's like such a high number. That's not that crazy. You know, Chipotle, from last time I checked on Chipotle, which has been a bit, but last time I checked, Chipotle was expanding like 300 concepts a year, 300 locations, right? So to get to 20 to 30 isn't like some like, whoa, this is crazy. Can you believe this? 20 concepts, like 30 new locations. So we got to get moving. So that's my 2 cents in regards to Cake here. Overall, they're talking about the annual growth outlook. They're talking about 1 to 2% comp store sales being up, and they're talking about top line 7 to 8% revenue growth. So that's their average annual growth targets they're targeting, which I think is very, very possible, which would be very good numbers overall. Okay, so let me see how the heck I get out of this now that I'm in this dang thing. How do I get out? There we go. I'm out. Okay, so Cake overall in the short term, you know, I don't know, anything's possible in this stock. The long term, the company set up very well. I'm just walked away a little disappointed. It wasn't the strongest quarter, and we're just opening Flower Child concepts way too slow. You know, so what are we going to be at the end of this year? 50 Flower Childs? 50 Flower Childs? We're talking about going to 700? We gotta move, man. Move. So let's hope we can get a hold of management team and get them to get opening some more Flower Childs, man. We gotta get rolling here. Alrighty. Next up here. Oh, by the way, will I be buying Cake stock or selling Cake stock? Definitely not selling. If anything, I'm buying more. Let me say this. You want to know how Cake goes to 100 quick? Management's got to open more Flower Childs. If all of a sudden they announce, you know, they're going to start trying to open 20, 30, 40 Flower Childs a year, like that's their goal in the next, you know, year or two to get to that place where they can start doing that consistently per year and do it on a high level, watch the stock explode. Watch this stock just watch it go to 100 like that. So, but anyways, we'll see. All right, Palantir's next up here. So, Cassandra out there. Oh, okay. Alex Karp. So what happened here during the years ended December 31st, 2025 and 2024, company incurred expenses related to the executive aircraft of $17.2 million and $7.7 million. It's quite a feat to spend $17.2 million in a year on business and personal travel, particularly when the jet's not even a rental, says this gentleman, Brent Thill, right? Assuming use of a mid-sized jet, okay, you know, Big Dog Carp's probably flying on a G650. So at an estimated $15,000 per hour, the $17.2 million still equates to approximately 1,147 flight hours or 13% of the year flying around. Listen, my guess is Carp is flying around like a beast, okay? I believe, it's my belief, Carp is the main salesperson for Palantir. Like literally, I think he's the main person by a mile that closes deals for Palantir. Not kidding. So he's probably all over the place all the dang time. So is the number high? Yeah, it's high. But it's, you know, they try to compare it versus Zuckerberg. I don't think Zuckerberg really likes to leave Meta headquarters. I could picture Zuck being down there as much as possible. I don't think Zuckerberg wants to like. Why does Zuckerberg need to fly all over the place? He doesn't need to close deals. Zuckerberg needs to be in the office at Meta headquarters every day, right? That's very different than Karp. Karp needs to actually not be at the headquarters. Karp needs to be out on the road constantly, going to meet with big customers, closing deals. Like so to compare it to Zuckerberg, I just think it's a bad comp. Like probably the only time Zuckerberg really has to travel is when he has to go speak to these politicians because they're questioning him like they were today, right? Like that's very different, very, very different. So, but anyways, is the number high? Sure, the number's high, but is it like so outrageously high that it's like, oh my God, you know? I think they're kind of grasping for straws at this point in time, and you know, the company's growth rates are ridiculous. Now, this is another thing that people are mad about. Palantir paid zero federal income tax in fiscal year 2025, despite having $1.5 billion in income. Right? listen, the company lost a lot of money for a lot of years, right? You're going to have rollover from that. But you'll see this sort of sentiment. Teachers can only write off up to $300 of their classroom expenses on their taxes, but the worst, most harmful companies in the United States can write off whatever expenses like private jets and yachts and business losses they want in order to pay nothing, right? So this is the issue with Palantir, man. Palantir is definitely a public enemy, right? And, Financial Times, look at the picture they use. Like, it's clear they're a public enemy. They're going to be used likely in this next election cycle here as an enemy. Contracts are probably going to have to get reviewed. Like, it's a whole situation. So Palantir, they're going to be in the storm for a bit. And as a Palantir shareholder, you got to understand that. They're not going to be getting out of this storm short term. It's just not. And I've been through companies that have to go through the storm, and it's painful, as I've had to go through Meta in the past. Meta was through a whole huge storm. Politicians were looking into them all the time, and governments, and they had to pay these big fees and fines and all this stuff. And so with a company like Palantir, just understand they're going to be in the storm for a bit. And if you want to be a Palantir shareholder for the long term, you just have to be okay with that. Because this storm's not ending tomorrow. If you're hoping this all goes away and everybody stops paying attention to Palantir and looking at them from a negative light, it's just not happening. They're going to be seen in a negative light for a while. You got somebody like Burry out there, trying to look at everything from a negative angle. They're trying to dive into everything. Carp spent too much on private jets last year. They're just going to look at everything. So, anyways, just something to keep in mind here, okay? Alrighty, let's get into Tom Lee.
Research, as I said, right there at Post 9. It's good to see you.
Great to see you, Scott.
So you think we're going to 7300?
By the way, before we get rolling here, pinned comment down there if you're looking to apply, join my private group, which is access to all my premium course curriculums, take your knowledge up to a much higher level than where you're at, access to our private Discord chat with myself and all the 6, 7, 8-figure members, access to 1000xstocks.com, exclusive weekly videos from me, as well as being able to see the stocks I'm buying and selling in my public account, the Fidelity account.
7,300 on the S&P in the near term.
Yeah.
So are we witnessing this slow turnaround for stocks to get back on track? What do you think?
I think stocks took some hits. Partly was a software downturn, and then this rotation out of the Mag 7 armies into the bullet makers for AI. Mm-hmm. And a general sort of risk off as gold surged. But, the earnings have been delivered solidly. We've been getting good economic reports. And I think positioning has gotten risk off enough that we can sort of climb maybe in a labored way towards 7,300.
Hey, how about that? Do you think, we talked about this at halftime today, are we appreciating enough how strong earnings season has been?
I think the stocks haven't reflected that because we've had a huge beat, a large percentage of companies beating. It has shown up, I guess, in small caps, but to me...
Yeah, but I mean, you know what I mean? It's like, if you said we were going to do double-digit earnings growth, and that would be a key pillar of the narrative as to why stocks were going to continue to go higher, and then we had all this volatile chop, and, we're not sure now where we're going... You just said, well, if we're going to do that kind of earnings growth, we're going to be just fine.
Yeah.
I mean, hold your horses for just a moment. Listen, we're coming off of 3 banger years, back to back to back banger years in the market, right? So to have chop in the market, that's very natural. After 3 banger years like this shouldn't be shocking to anybody, just to be honest. That's what you get many times, regardless of what the earnings are like. Earnings can be a banger, and guess what? You're still going to get this sort of chop in the market. It's just what happens after you have 3 great years. And that's why it's hard to put together 4 great years. It's possible, and it has happened, but it's very difficult. There's only a few time periods I can look back at in the last 50, 60 years. We had 4 great years back to back to back. It's very rare.
I mean, there's this old adage that it takes a whole lot of E to offset PE, meaning you're right, the earnings have been good, but things that have affected multiples are what's causing the market to come in. The AI, a new Fed chair, potential war. So you're right. I think the fundamental anchoring is actually good. So that means stocks eventually kind of re-anchor to that and we go higher.
So you say there are 3 key trades: rotation back to the Mag 7, the IGV bottoms, that's software, and crypto bottoms. But you're not suggesting that those 3 items have happened, are you?
Not yet, but it's where we're maybe 90% of the way through that, because I've seen some of the positioning data. So we know on the, like, for instance, prime brokerage, Goldman data, software ownership is like multi-decade lows. And then we know that the Mag 7 have gotten cheaper than the bullet makers, which has never happened in 10 years. They're 3 PE points discount. And then, of course, on the crypto side, we've already gotten to drawdowns that are basically 80% of what's been in past crypto winters. So I think those are setting up to be really big trades. Maybe they've led the market. So they bottom first and they'll start to rally even if the market's peaking.
Does NVIDIA earnings 1 week from today hold the key to the whole thing? Just given the fears about AI and the spend. And we need to get the results. We need to hear from Jensen Huang.
I mean, that could set the bottom because, like if you look at the software index, this is like the 8th week of a pretty severe downturn. So next week, as you know, sometimes 9 is a big number, turning point. That could mark the bottom for software.
Okay, so what? Listen, NVIDIA numbers are going to be great. They're going to beat. Everybody knows it. How do we know it? Because one, that's what NVIDIA does quarter in, quarter out. How do we know it? Because have you seen the CapEx numbers? Where do you think like a far majority of that money is going? Straight into NVIDIA's pockets. Like, this isn't like rocket science. The guidance is going to be great. Numbers are going to be great. So if the market gets super excited about NVIDIA, like, it's possible, but it's just silly. It's like, NVIDIA numbers are going to be great. Guidance is going to be great. Conference call is going to be great. Jensen's going to be talking about we're all going to sell a trillion, gazillion chips. Like, what are we talking about here? Like, come on, man. Crypto. Listen, Bitcoin, Ethereum, that price action's not good, right? And these are assets that are driven off price action, and their price action's bad. Like, they just aren't showing any signs of life. And that's with the market being near all-time highs right now. And you just have to think, gosh, if the market got hit 5-10%, where does Bitcoin and Ethereum go? Remember the Bitcoin cycle, I've been talking about this. It's supposed to, we'll see what happens, but it's supposed to not bottom until the 4th quarter of this year at around 30,000. So the Bitcoin cycle's accurate. Like, there's a long way to go. Like, Bitcoin's going to go down another 50+% if that's accurate. And Ethereum probably goes to $800. I think Tom Lee's losses are big right now. Just get ready. They ain't nothing yet, right? But we'll see. That's if that Bitcoin cycle's accurate, which we'll see. Home builder sentiment drops in February. Housing affordability remains an ongoing challenge. Okay, so Mohammed El-Alarian expect a lot of volatility as we go forward.
Maybe the back half of the year?
Yeah, I think we will see it going back towards 4.5. And when we get closer to that, you'll hear something from the administration that will be very worried about the mortgage issue in the context of the affordability issue. You'll hear more about some form of yield curve control. So I think we are in a range from 4 to 450, with the average being closer to 450 than it is to 4.
Mohammed, if you were a PM right now, you look at some of these software stocks that have just gotten absolutely crushed, and multiples now are half what they once were. I don't know. I'm just curious how you view it. I know you're not a PM, but you certainly talk to plenty of people who are still investing. What are your thoughts about that? Whether there is that opportunity or whether you have to really tread carefully?
So I would say we're in a different market. We no longer have the love affair with AI that we had last year. This is a market David defined, I think, and will continue to be defined by 3 words: volatility, dispersion. You're going to see a lot more dispersion, and fragmentation. And I would build my position bottom up, not top down, and I would certainly be picking up names that were impacted by this theory of the market for lemons, meaning they overshoot on the way down because they end up having one technical correlation with names that are weaker. So I think this is a massive opportunity for stock picks, and particularly in the AI world and in the world impacted by AI. So for me, this is a world in which people should be building.
A new stock I'm looking at is Palo Alto Networks. Palo Alto Networks, that stock, I think it went down to 150 today. I believe I could fly. Let's take a look here. Palo Alto Networks. Let's get SanDisk out of here, and let's get the S&P 500 out of here. Yeah, 152 Palo Alto Networks here today. So it's been a great stock over time, like 5 years up 130%. But there's no doubt the stock's been getting hit heavy, but that's along with IGV and all the software stocks, right? On a 1 year basis, it's now quite negative, about 27% down now at this point in time, and year to date down 15%. So, but anyways, that's a cybersecurity company that almost every big company uses, and it doesn't seem like they're going to be replaced. So that's actually a very interesting stock, Palo Alto Networks.
Their portfolio bottom up and picking up some really good bargains at this point. It doesn't mean you buy the sectors across the board. It means you buy those with strong balance sheets, strong business models, and strong leadership.
And just lastly, Mohammed, on the volatility that you're foreseeing for the rest of this year, is that purely tied to AI as the market sort of bifurcates between the winners and losers, or does it also tie to geopolitics with U.S. and Iran trying to focus on the second round of talks?
Yeah, I mean, it ties to both, and geoeconomics rather than geopolitics, meaning that increasingly economic outcomes and policies and market outcomes will be less a function of economic and commercial logic and more a function of national security, geopolitics, and domestic politics. You know, we no longer have the unifying theme. I grew up in an easy world where there were two themes: globalization, the ever closer integration of countries, and the Washington Consensus, certain ways you run your economy. We don't have those anymore. So we will get a lot of volatility as we go forward.
Yeah, Europeans clearly trying to wrestle with that as well, given
a lot of volatility going forward. So first off, what did I tell you on Inauguration Day? We're in the Trump stock market. It's going to be volatile. Get used to it, right? Market in general can be volatile, but especially, in a Trump stock market is going to be volatile. And if you went through term one, you saw some volatility. And like I told you guys, there's going to be certain time periods where you're like, trying to figure out how many Lamborghinis you're going to buy. And the next minute you're going to be figuring out, if you can even afford McDonald's. It's just, that's the sort of stock market we're in. That's the sort of stock market we're going to remain in. And there's going to be big ups. There's going to be big downs. There's going to be time periods when your portfolio is exploding to the upside and breaking new all-time high. And you look and you're like, oh my gosh, made another 3,000 a day, and another 5,000, another 10,000. Oh my gosh, this is so easy. This is the best thing ever. And this could be other time periods like, dude, am I ever going to hit a new all-time high again? I'm so far from it. That's just how it is. So, you don't get frustrated with it. Remain focused on the long term, buying great long-term companies and all that good stuff. Don't, focus on income, expenses. Make sure you got more income than expenses. Invest wisely in great companies. Do your research. Control what you can control. The market will be what the market's going to be. Alrighty, Mike Wilson.
Of a new bull market and earnings cycle, especially for many of the lagging areas of the index. That was your call in mid-November. Is that a call you still stick to?
Yeah, well, good afternoon. First of all, I would say yes. I mean, the story we actually started writing about in May of last year, which was our mid-year update, was exactly that. I think our view still remains out of consensus around this idea that Liberation Day marked the end of what we call a rolling recession. So we're actually not only in a new earnings cycle, we're in a new economic cycle. And that's why we're seeing the broadening out now, because there have been many parts of the economy that have been sort of mired in a recession for the last 3 years or so, and they're just now starting to emerge. Areas like consumer goods, some of the financial sector, industrials, obviously, which is getting a boost from AI CapEx, but also getting a boost from, basically underspending for the last several years. Parts of technology are still doing quite well. And so
this is why I stock like Cake, to bring it back to Cake. If Cake's down, let's say 5% or less, or even goes green tomorrow, don't be shocked by that. And the reason you don't want to be shocked by that is people are going to look at a stock like Cake and be like, at the end of the day, the numbers are likely going to get a lot better over the next year and over the next several years. And so, it wasn't the most exciting year last year, but 2026 is going to be a lot better. 2027 is going to be a lot better. We're going to be in a strengthening economy. That's a view, right? No, that could be wrong, but at the end of the day, you look at the market's saying the economy is going to get better over the next few years. And that's why you're seeing this broadening into a lot of these stocks. You're seeing momentum. And the big tech's not rolling because like those are the type of companies that are supposed to do good regardless of the economy. Like those companies have done just fine even with a weaker economy the last few years. But if you believe we're in a new economic cycle that's strengthening, then it's hard to be bearish on restaurants, right? It's hard to be bearish on travel. It's hard to be bearish on hotels and consumer goods, right? Like all that sort of stuff. So just something to keep in mind there.
Running out is the real story, and we doubled down on that in November because the evidence was coming through. And in May we didn't know, but now we know. I mean, the earnings growth for the median stock in the Russell 3000 is now running double-digit growth year over year. That's the first time we've seen that in 4 years. So it's happening.
You don't want to get in the way of stocks like Nike, stocks like Estee Lauder, those sorts of stocks. If we got a strengthening economy, even stocks like Wynn Resorts, don't get in their way. Like if you got an improving economy over the next few years, don't get in those stocks' way. Oh boy.
The question now is how long can it last? What could derail that? And what do you pay for? I mean, those are always the questions. But the first part of your question is a resounding yes. We are in a new earnings and economic cycle, and the market has figured that out.
Hey, Mike, it's been pretty remarkable to see that we've gotten this tremendous stock volatility at the single stock level, also at the sector level. But when you look at the S&P 500, it actually hasn't really done much this year. What is it going to take to break us out of this range? And what could be the catalyst to get us past that elusive 7,000 level that everyone's waiting for?
Yeah, that seems to be the question. I mean, obviously, stock investors don't. I mean, if you can make money in other areas, that's fine. I think that's the real main message is that the market is not going anywhere at the S&P level, but there are many sectors that are doing well, and that's the name of the game. Now, to your question, I think what's going to break us out ultimately are two things. Number one, there is some uncertainty around the AI CapEx cycle and the disruption that perhaps it could cause in the labor market and other areas. So I think we're in one of those testing periods now. We wrote about that this week. We think that ultimately it's a little bit premature to kind of throw a cold blanket on the AI cycle. It's just getting going, from our standpoint. And then secondarily, I think we have a new Fed chair nominee with Kevin Warsh. And the market always tests the new Fed chair, whoever it is, when they come into power or office. And so first we have to go through the confirmation hearings, and then we got to learn a little bit more about what he really intends to do. So that could lead to this, the market kind of struggling for another month or two. And then ultimately we think once he takes office, we think that'll be another catalyst for why the market can have a really good second half. And we stand by our $7,800 price target for the S&P by the end of this year.
So there's two main things that could break this market out. One is a scenario where you see economic strength in the numbers, but CPI continues to go lower, which means, you got a strengthening economy with inflation being dead. That would be the ultimate best thing, because then the Fed could be able to cut, maybe more times than people expect into a strengthening economy. That could be seen as a very good thing. The other thing that I think is even more realistic, though, if you want to think about something that could break us out, is next quarter when companies report, which they're still, big dog companies are still like, a little over 2 months away from reporting their next earnings. I'm talking Meta, I'm talking Amazon, those sorts of companies. Show a major acceleration in revenue growth. Show us that the CapEx is being well spent. If Meta comes in with like a 37% revenue growth number, if AWS accelerates growth to high 20s, maybe like 30% number, okay. Big tech starts moving again. People will be like, you know what? Okay, they're spending a lot, but look at the revenue growth. It's so ridiculous. Right now, like the revenue growth is good for these companies, maybe even really good, but it's not like, oh my gosh. Have AWS push close to 30% growth with how big that business is. Have Meta come in with like a 35% revenue growth number or 37%, and watch the momentum start to come back into those stocks, because then people will be like, okay, they're spending a fortune, but look at the revenue growth. It's ridiculous. So, they're spending wisely, right? All right, guys, appreciate you joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel. Once again, my private stock group, if you're looking to apply to join us in there, that will be the pinned comment down there today. That is a group mainly for individuals with $100,000 plus net worth. You can still apply if you have under 100K net worth. It just might not be a good fit for us. We'll see, okay? Much love and have a great day.